So one of the interesting and I think quite harmful reforms that's being made to the UK venture capital ecosystem is an incoming tax on carried interest. Now, Treasury are looking at ways that they can essentially reduce the impact of this, but fundamentally what's going to happen is funds increase in nominal value through the companies that they invest in, raising at higher rounds after that initial investment. So the value of the companies invested in has gone up. And one of the reward mechanics that funds have is that over a certain hurdle rate, so i.e. once they've returned £1 for £1 of the capital that's been invested into the fund, there's usually a reward mechanism called carried interest, which can be around 20% for the sake of argument. Now, what this means is that it's changing the performance incentives for funds. Funds usually make money in two ways, one of which is charging a fee on the investors investing their capital into the fund, which helps them run the fund. It means office space, employees. And the other is around the carried interest, or the reward mechanism through which they are incentivized to grow the value of the fund through making wise investment decisions. Now, by taxing carried interest, this creates a couple of problems for funds, especially for the best performing funds in the UK. It means that ultimately they're going to be less rewarded for performing well in terms of the investments that they're making, and ultimately incentivizes them to increase fees that they charge from investors, which again means that we're just incentivizing fund managers to charge high fees and be thinking much less about the performance of those funds.